The December unemployment rate numbers will be released any minute now by the Australian Bureau of Statistics. Joining me is business reporter Edward Boyd. Ed, economists are predicting the unemployment rate will remain flat in December, so that's at 3.9%.
Yeah, look, that's the expectation from economists. Bloomberg have done a big survey of about 30 economists. That's the market consensus. The unemployment rate is tipped to remain flat today at 3.9%. They're expecting about 15,000 jobs to be created during the month. Let's just have a look, see if the numbers have come through. Yes, they have. As expected, the unemployment rate in December, it has remained stable at 3.9%. But the thing to watch here, Danica, is we are expecting, well, the Reserve Bank and plenty of economists out there are pricing in the unemployment rate to slowly continue rising throughout this year. You can see what the unemployment rate's done since November 2022. When it was at 3.4%, which is basically the lowest level since 1974. So the unemployment rate really went down a lot in November 2022. And since then, it's gradually bounced around a little bit, but slowly been increasing. And it is now on a bit of an upward trend. It's moving up very slowly, though, and it shouldn't be alarming to anyone out there in the economy. We know that Australia's unemployment rate, the natural rate of employment that the Reserve Bank talks about, is closer to sort of 4.2 to 4.5%. That's the sort of sustainable rate of employment in our economy. So the expectation is unemployment is going to slowly creep up over the next couple of years. I just had a look at the RBA's most recent forecast, which came out during the month of November, and they show the unemployment rate reaching 4.2% by the end of this year. So in other words, we can expect to see plenty of numbers like the ones we've seen today over the coming months. Here's just more detail on what happened with the labour force numbers during December. You can see unemployment, loss of about 65,000 jobs during the month. The rate staying stable at 3.9%. Underemployment rate stable at 6.5%. The participation rate, now it was at a record high during the month of November at 67.2%. That's come down quite significantly. Just in a 1 month period. Hours worked down about 10 million as well. I think the participation rate's the one that economists are probably going to want to talk about today when they do interviews later this morning, because of losing 4 basis points in a month is quite a significant drop. The participation rate's obviously the percentage of people either in work or actively looking for work. And I guess that fall in the participation rate today is really a sign that Australia's economy is slowing down a bit. We know economic growth in the September quarter for GDP, it was only 0.2% growth, and we'll get the December quarter GDP numbers in the coming months. But the expectation is our economic growth is slowing this year, and we will see a slow easing in the unemployment rate due to that slowing economy. Obviously, it's due to higher interest rates, and we've had pretty high levels of inflation in our economy over the last 2 years, and we know inflation is starting to come down as well. But yeah, look, today's figures, they have come in as expected. Unemployment rate remains steady at 3.9% during the month of December.
Yeah, as expected, Ed. We know, of course, the Reserve Bank's first board meeting of this year is about 2 weeks away. How do you think that they will interpret these latest numbers?
Look, these numbers really confirm that Australia's economy is slowing down a bit, particularly that fall in the participation rate today. So the RBA is going to see that. They're going to say, OK, we've lifted the cash rate very aggressively over the past 2 years. It's currently at 4.35%. Cash rate in Australia is the highest level in roughly 12 years. And we're starting to see the effects of all those interest rate rises on the economy. We know inflation, the monthly inflation indicator came out just a couple of weeks ago, showing inflation is at 4.3%. But we'll get the full quarterly inflation numbers at the end of January. That's the key piece of information the RBA is going to want to look at before they make their rates call a week later. So they've seen today's unemployment rate numbers. They've seen unemployment's remained flat, but the participation rate's falling, shows the job market's cooling off a little bit. And then they'll get to see the CPI data for the December quarter, and they'll make a call. But I expect the RBA today is probably going to think we can keep the cash rate on hold at 4.35% for a while, because it is having an impact on Australia's economy. Things are slowly slowing down.
Well, that's certainly a positive. Just finally, Ed, the stock market dropped sharply this morning. Has there been much reaction to the jobs numbers?
Yeah, look, the market was down pretty sharply, down about 1% in early trade, but we can bring up a live chart of the ASX 200. It was just before the numbers came out, it was down about 0.6%, it was down about 0.8%. It's actually recovered a bit to 0.6%. So these numbers are really confirming the market's thinking, okay, interest rates are going to be on hold at 4.35%. There's not going to be, it looks like there's no chance rates are going to go up further in the month of February. We can have a look at the next page, which should be the Aussie dollar. It was at 65.5 US cents just before the decision came out today from the ABS. It's dropped slightly to 65.4. So not much impact here on the Aussie dollar currency. Stock market it's still having a tough day. Look, the materials sector is a lot lower today. That's the iron ore producers. Coal companies are down too. I think a lot of that's due to China's economic numbers coming out yesterday showing economic growth in China last year, 2023, was only 5.2%, and that's one of its worst years since 1990, when there was a recession basically all over the world. So we know China is a big contributor for our economy. We sell a lot of iron ore to them, a lot of resources. It's a massive two-way trade between our two countries. And when China's economy is struggling, a lot of businesses in Australia get affected, and we're seeing the impact of that today on our stock market, down about 0.6% just after 11:30.
All right, well, the figures are out. Edward Boyd, thank you for that update.